This is pro John Ag. Get ready, because what just hit the markets isn't volatility. It's a full-blown liquidity bloodbath. In only one session, silver fell more than 10%, plummeting below 66 Oz. This was the fastest and biggest loss we've seen in months. Gold fell about 4%, and silver miners all over North America, Discovery Silver, Endeavor Silver, and others, were hit hard, losing 8 to 12% in pure fear. Brent crude, on the other hand, shot up beyond $120 a barrel. Tensions over the Iran conflict rose, and attacks on energy installations shook the system. But the metals, which were supposed to provide a safe haven, disappeared under the weight of fear and deception. The mainstream media is calling this geopolitical risk, or market volatility due to oil. They're making it sound like metals are just reacting normally to the instability in the Middle East. Don't believe it. That story is really a cover-up. Headlines want you to believe that this crash is unrelated and that silver fell because oil rose. The truth is much worse. What really caused this wipeout? Covert, planned forced liquidations, COMEX paper contracts, ETFs selling out at the wrong time, and JPMorgan-backed funds coming in to take advantage of the panic. While the general public panics about news about war, the rich are buying every ounce they can get at $65 to $66. Now, make the connections. The number of open interest in COMEX silver futures shot up, which means that these aren't normal sell-offs. This is a short liquidation cascade designed to get individual investors out of the market while giving institutions a chance to buy. On the ETF side, products that are mostly for regular investors are losing money quickly, with huge outflows showing up on screens. At the same time, smart money ETFs are secretly hoarding physical metal behind the scenes. People with a lot of money and a lot of time are buying up every sell order that comes in because of panic. This is where things become scary. Algorithmic triggers make retail panic worse. Margin calls pile up, stop losses hit, and automated selling speeds up the loss. In the meantime, whales are grabbing silver like it's about to disappear from the earth. And don't forget about the rise in oil prices. Brent is already above 120s, and the steady stream of news about the conflict in Iran. This isn't just noise in the market, it's a FOMO bait trap, a carefully planned scheme to persuade retail to sell silver while the real players buy it up. And that's not all. The mechanism feeds off of every time retail reacts. The paper market is a stage that makes people fear, which helps a small number of people at the expense of a large number of people. The typical investor sees red numbers and believes, the war made silver drop. But the elite know exactly what they're doing. They're managing the panic, controlling the market, and collecting physical silver while the rest of us are in the dark. The volume tells the whole story. The rise in COMEX's open interest isn't a coincidence. It's a clear evidence that forced liquidations are hitting the chain. ETF flows back it up. Retail products are losing money, while smart money ETFs are quietly building up. You don't need a crystal ball to notice the pattern. The data makes it clear. This isn't a market reacting to war. It's a market set up by people on the inside who are using war hysteria as a cover. And here's the thing that will make your head spin. Do you really think this price movement is normal? Do you think silver went down only because oil went up and fear spread? Wait till we show you the vaults bleeding dry, COMEX and London storage houses showing registered silver at all-time lows, deliveries being delayed, and physical silver disappearing from the system. Scarcity wins over retail panic every time. What you see on the screen is just the tip of the iceberg. Next, we'll show you the crime scene behind this crash. How vault inventories are bleeding, paper derivatives are regulating the flow, and the biggest banks in the world are causing this chaos to buy silver at low prices. Believe me, once you see who's buying and who's being stuck, you'll know that the system is rigged and your panic is their paycheck. Vaults aren't just low, they're losing money. Reports from COMEX in London suggest that registered silver is close to multi-year lows, and deliveries are sometimes delayed for days or even weeks. What if this were crypto? Exchange balances would be at their lowest levels in years, liquidity would disappear, and every sell order would be met by a wall of unseen hands ready to pick it up. The silver market isn't broken. It's been set up to work that way. The kicker is that 90% of silver trade now is paper derivatives. Futures, options, and ETFs are all contracts that don't move any real metal. But these tools regulate the market, make it look like there's more money than there really is, and set pricing. Retail investors panic and sell for pennies on the dollar, while banks use these paper positions to bring the price down, all without touching a gram of real silver. It's leverage as a weapon. Now put the pieces together. The people behind this mess include JPMorgan, BlackRock, and even the Fed. They set up selling pressure that is perfectly timed with macro diversions like war news, oil increases, and hawkish Fed comments to force people to sell. When retail investors leave at the bottom, weak hands go, and the elites secretly buy thousands of ounces for a fraction of what they're worth. Every panic reaction is planned out, and every margin call is expected. This is when the bait and switch comes in. The media screams geopolitical risk, experts warn of inflation caused by oil, and the Fed's hawkish pronouncements make things more credible. The real reason is right in front of you. The fear is a smokescreen, a way for the rich to buy silver at prices that are historically low. War and big news stories are just a cover for a market robbery. The trend is evident when you look back in time. During the financial crisis in 2008, gold was manipulated on paper, forced selling happened in waves, and institutions bought up gold at fire sale prices. In 2020, the COVID meltdown caused metals and cryptocurrencies to be sold off in a coordinated wave, while smart money quietly hoarded. The same thing happened with the FTX liquidation. Panic caused by planned events, regular investors losing everything, and insiders cleaning up. It's not luck. It's a technique that has been worked on and improved for decades. And here's the part that most people miss. Real silver is going away even though paper contracts are taking over. There are few vaults, supplies are late, and recorded inventory often don't show how scarce things really are. Every ounce that goes from registered to eligible or private ownership is no longer visible on the market. This creates a shadow scarcity that the public doesn't notice, but insiders take full advantage of. The West thinks it's purchasing a liquid market, but in reality, every paper position is becoming less and less connected to the metal that backs it. Now think about what this means. Panic in the retail market causes people to sell in the paper market, which leads to more and more liquidations. When ETFs and futures are sold off, open interest goes up, and brokers make margin calls. The market feeds on fear, which keeps the cycle going. At the same time, elites are quietly taking physical silver off the books, storing it in vaults, and watching the system fall apart for their own gain. It's not about who holds contracts, it's about who controls delivery. But the true shock isn't in the West. While COMEX and London are in a panic, the East is quietly taking in everything that goes missing from public view. Shanghai premiums are going up a lot, and Asian central banks and mystery mega-wallets are quietly stockpiling actual silver, ignoring the pandemonium in the West. Every ounce that goes to Asia takes away an ounce from the retail market, which is a transfer of wealth that the mainstream media won't report on. The script is cruel. It spreads panic in the paper market, forces people to sell their silver, takes advantage of retail fear, and steals physical silver from the West, all while seeming to be macroeconomic news. And while the West is freaking out, the true drama is happening in the East. Shanghai premiums are about to show who is truly buying and who is getting stuck. And the West is still freaking out over forced liquidations, rising open interest, and ETFs losing money. The East is quietly changing the rules. Shanghai silver premiums have shot up to $25 Oz over COMEX. This is a clear evidence that Asia is storing actual silver, like it's the last lifeboat on a sinking ship. At the same time, US ETFs are seeing huge outflows, and individual investors are selling hurriedly at paper lows. Meanwhile, Asian central banks and shadow wallets are secretly buying up the real metal behind closed doors. The best part is that these consumers aren't playing the paper game. Central banks and huge anonymous wallets are skipping over futures, ETFs, and swaps and going straight for real silver. Every ounce stored in Shanghai, Singapore, or private vaults is an ounce that is no longer under Western control. This is an undetectable transfer of wealth that threatens the very foundation of US dollar domination. While the mainstream media speaks about oil prices or the unpredictability of war, these people are putting into action a plan that has been in the works for decades. Real assets over paper and control over what really exists. Now, put the pieces together with policy. The war in Iran is getting worse, sanctions are on the way, and problems with energy in the Middle East are affecting markets around the world. The Fed's hawkishness and rising U.S. interest rates are lowering demand for metals in the West, which makes the retail fear seem reasonable. But in the East, these big problems don't matter. Buyers are stacking actual silver to gain a strategic edge, no matter what COMEX futures say. There is a difference in policy. The West responds, and the East builds up. Mining problems are making things worse. Mexico, Canada, and Peru are having trouble meeting demand for silver, and vault shortages generate shadow premium markets where physical scarcity isn't reported to the public. This isn't a small problem. It's a systematic squeeze. Every ounce that goes into Asian vaults makes the market even tighter, which makes Western paper holdings less connected to reality. Futures and ETFs may show liquidity, but the real metal is disappearing, hidden away, and controlled by people that most investors don't even know about. This is where the big effects on the economy start to happen. In Asia, people are buying up real silver, which could hurt the paper market in the West. COMEX futures, ETFs, and leveraged derivatives are becoming less and less useful since they don't reflect what's really going on in the market anymore. They are separate from the physical market and are just a digital mirage that can break down under pressure. Retailers in the West are stuck with contracts and ETFs, while the East is building up genuine wealth like real silver that can't be created, changed, or taken. And don't forget about the political side of things. Every barrel of oil that is disrupted, every threat of sanctions, and every rise in the Iran conflict adds to this supply chain struggle. Metals don't only react to war. The infrastructure for manufacturing, delivery, and storage is also under attack, making scarcity worse in a way that paper markets can't show. While COMEX shorts are sold off and ETFs report outflows, the East quietly fills the gap with real silver, making a market that Western investors can't see. Now picture what happens. The West freaks out. Liquidations happen one after the other. ETFs and derivatives become separate from real metal, and at the same time, Asia takes real silver out of the system through central banks and shadow wallets. This makes an invisible transfer of wealth and power. This isn't just a market move. It's a change in the way global monetary power works, happening quietly as people pay attention to headlines and price charts. And here's the cliffhanger. All of this, war, Fed policy, supply problems, vault shortages, and East versus West accumulation, leads to an unavoidable conclusion for the global economy that the mainstream won't admit. The next chapter shows the final reckoning. How debt, printing, and systemic weakness come together with physical scarcity to make a market trap so big that regular investors may never be able to get out unless they act now. And all of this chaos leads to one harsh truth. The world's debt is too high to pay off. The US's debt alone is over $35 trillion, Japan's bonds have yields of 0.8%, and the globe as a whole has more than $350 trillion in debt. Every time interest rates go up, leveraged holdings like silver, gold, crypto, and stocks get crushed, starting with retail bearish. Margin calls pile up, ETFs lose money, and derivatives make things worse. This isn't just a lot of up and down. It's a systemic bloodbath, and the rich are standing by with buckets ready to collect every last bit of cheap riches. The Fed is stuck, and here's the kicker. Inflation won't go down, and even though the Fed talks tough, it has to print trillions to keep the market stable. Every dollar that is printed makes the dollar weaker, lowers the value of paper assets, and makes the balance sheets of people who already have real wealth bigger. The same mechanism is now being fed by retail panic selling. The more you panic, the more elite players buy physical silver, gold, and even crypto at rock-bottom prices. Every crisis maneuver is planned, and every macro shock is used to their advantage. The trap is now clear. Paper contracts, ETFs, and derivatives make up most of the markets, which makes it seem like they are safe and liquid. At the same time, actual assets are hard to come by, vaults are emptying, and futures are getting farther and farther away from reality. The silver fall we've seen isn't simply a short-term drop. It's a structural revelation. Retail is vulnerable, and elites make money on every macro swing, war headline, and rate shift. Silver has already dropped 10% in one session, and technicals and a lack of supply suggest it could touch $55–60 Oz if the panic continues. Gold isn't safe either. It's probably going to stay between $1,780 and $1,820, while people in Asia keep buying it quietly behind the scenes. The West is losing money because of the paper, while the East is stacking real, tangible metal. This takes physical wealth out of circulation, which means that Western stores will run out of goods if panic persists. The harsh truth is that the system is set up to benefit a small number of people at the expense of a large number of people. Banks, COMEX, and shadow vault players have built a world where paper moves quicker than metal, where headlines control emotions, and where fear causes actual wealth to change hands. Every forced sell, every macro correction, and every liquidation helps the insiders while the public loses access to what they thought was liquid. So here's what you need to do. Leave the banks and go to self-custody right now. Stop using derivatives, paper contracts, and ETFs. Get your hands on items like silver, gold, and crypto that can't be deleted with a keystroke or a change in policy. Every second you wait makes you more vulnerable. The paper market is rigged, the economy is bad, and the next wave of panic could wipe out decades of wealth in only a few hours. And here's the reality that will make you drop the mic. In a world where governments produce money all the time, banks manipulate money all the time, and wars break out at random times, freedom is the only thing you really possess. Freedom is real, and it starts with holding on to something they can't take away. Not a dollar, not a bond, not a contract. Having silver, gold, and crypto in your possession is more than just money. It's protection against the system falling apart. So think about this. Will you just watch as the elites plan the next liquidation? Or will you take what can't be printed, changed, or erased? The system doesn't work. The trap is ready, and the clock is ticking. The silver meltdown, the East versus West buildup, and the debt mountain are all signs that something is wrong. The fire is the elites, and the fuel is the panic in stores. You are part of the system that feeds banks, ETFs, and paper contracts if you still trust them. The only thing that can protect you is physical silver, gold, and crypto that you keep yourself. Stop seeing your money disappear. Take charge now. Put your assets under self-custody. Protect what they can't delete, and don't let the news decide your future. Are you stacking silver, gold, or crypto? Let us know in the comments. Which one are you going to protect first, and why? I'll read every response. Let's see who is ready to live through the next crash.